Hey traders, welcome to Quantsapp. My name is Varun, and again, index trading is quite popular, right? So I have a lot of requests saying we want some top-down approach for indices. So top-down approach, for people who do not know, it is when you identify multiple things on a macro level as well as on a micro level. So that is an approach that we'll be learning today. So the video's title will be maybe 4 steps towards index options trading, right? Sort of like that. Okay, we'll go along those lines because I really do have 4 steps which will help you become an overall successful trader, right? So we'll try to learn about those things, and overall will become a very effective trader when it comes to indices. Okay, so we'll go for some intraday trades, we'll go for some positional trades. So it will be 4 steps for an intraday trade as well as a positional trade. Okay, so maybe one step will be different on each of those, but the general concept will be the same. Okay, so we'll focus on Nifty, or should we focus on BankNifty? So BankNifty is supposed to be the most traded index in the entire world, right? So based on data, at least I've seen that BankNifty has the most volumes in the entire world. So let's stick with BankNifty. We'll think about BankNifty, what goes on in BankNifty, and how we can trade it on an intraday basis as well as on a positional basis. Okay, thank you so much for the support lately. It has been awesome to see. I love all of your comments, even the ones which are in the feedback format, so that I can improve myself. So I am always very much hopeful of that I get a lot of feedback, so that I can improve myself and become and bring you the best content that I can. All right, okay, so let us start without wasting a lot of time. We will start with intraday trades as well as positional trades. ठीक है, कट करो यहाँ से, मैं पेन ले लेता हूँ. ठीक है, यहाँ पे पेन था ना? ओके, ठीक है, था तो पेन, बट व्हाटएवर, छोड़ जान दो. ओके, सो यहाँ से अभी फिर से रिज्यूम. आई गेस मैंने 1725 के हिसाब से, ठीक है, तो पकड़ ले, मेरे को अराउंड 10 मिनट और देना पड़ेगा इधर. ओके, रिज्यूम यहाँ से अपन रिज्यूम करेंगे. ठीक है. So I am on web.quantsapp.com. So this is the web app. Okay, web.quantsapp.com. This is the web app. So I have opened the web app since I'm on desktop, but if you want to open it on the mobile, so the link will be in the description. You can directly go to the app store. It will redirect you towards the app store. So for Android and iOS, we have a mobile app which is same as the web app. So there are no data changes around here. There are no tools that are mobile specific or desktop specific. All the features are same across all the platforms. So you can just go and install that. Okay, so let us start then. The first thing that I generally look at is the built up data. So just go to the track section, just go to built up Scrip symbol, open that. Okay, and here what I like to do is go to future OI historical. Okay, so future OI historical is something which is a very effective tool, because this helps you to see the overarching trend of the entire Scrip. Okay, so like as you can see, it's BankNifty here, and the data I am looking at is from 10th of June 2024. So I can see that the overarching trend is currently positive. How can I say that? Because it is entirely color coded. So I don't even have to look at any numbers. I can just look at the screen and glance through the information with just like a snap of a finger, right? So it hardly takes me a few seconds to just analyze what the entire trend of the particular script is, or if there is no trend in the particular script. Okay, so there are 4 types of built ups. You can see 4 colors. So long unwinding, short and short covering are signified from the green, blue, red and yellow color respectively. Okay, so what exactly is this built up data, or what do these colors signify? Okay, so whenever there is long built up, that is when price increases and open interest also increases. So it is shown by a green color. Okay, whenever there is long unwinding, that means future price is falling down and futures open interest is also falling down. So it shows you that the overall trend is bearish, but it is temporarily bearish. It is not backed by participation. Right? Whenever there is short or red color, that means price is decreasing but open interest is increasing. So it shows a bearish trend which is backed with participation. And whenever there is short covering, I know that price is increasing but open interest is decreasing. So that signifies whether participation is happening or not, right? So overall, whenever I see green and blue color, that means the trend is bullish. Why? Because I know that there is fresh buying, and wherever there is dip, wherever there is a dip in the market, I know that dip is created because of long unwinding. Okay, so it's a profit booking point. So for example, this is where price started. Okay, it moved up, it moved up, it moved up, then it started falling down. Okay, I know that it started falling down and it fell down due to long unwinding. There was one short which we can ignore because the overarching trend is long and long unwinding. So here I can see that there is long unwinding on the 2nd of July, and after that immediately long built up followed. Okay, so this signifies a very simple overall trend. So I need, for a healthy trend, I need longs as well as long unwindings. Okay, so if there is long as well as long unwinding, I know that the overarching trend is bullish. Okay, so if it was short and short covering, then I knew that the overarching trend would be bearish, right? So I just know that by the look of it. So whenever price moves up, it moves up with long and long unwinding. Whenever price falls down, it falls down with short and short covering. So that is how this is used. So I'll give you a couple of examples. Maybe let's say if I look at some historical data. Okay, let's see. Where do I see short and short covering? Okay, so maybe somewhere around here. Let me just zoom in a bit for you guys. Okay, right, this would be an ideal short and short covering trend, right? So you can see the price started to fall down. Okay, after that again it was consolidating. Okay, it came up, but it came up due to short covering. So I know that the overarching trend is short and short covering, right? So after that you can see price started to fall, it started to fall, then it actually came down to long and long unwinding. Okay, and after long and long unwinding, it slowly gradually started to move up. It consolidated for some time and then it gradually moved up with the help of long and long unwinding. So you can see this with the overall trend. So for short and short covering as well as for long and long unwinding, this is something that has always been there. Okay, so the trend is always very much important. So long and long unwinding and short covering is something that you always need. Now after that, after this, what do you need to look at? Okay, so if you are an intraday trader, which is a very good chance that you are, because a lot of traders love to trade on an intraday basis, they don't like the overnight risk. So for that you can just go to the analyze section and you just open charts. Okay, so charts, you might be wondering that charts, there is nothing special in charts. Why is this guy showing charts? So I am showing the chart to show our proprietary order book indicators. Okay, so our proprietary order book indicators are quite effective. So just go to indicators. I'll add those indicators in front of you. Okay, so just search for buyer. Okay, you will find buyer initiated quantity. Then search for seller and you will find seller initiated quantity. So add both of these indicators. Okay, so once these are added, I like to make them a little bit more readable. So let's say if I turn it into a 5-minute chart, 5-minute or a 1-minute chart. So I like to use it on a 1-minute chart, but I know a lot of people trade on a 5-minute time frame. So that is fine. So let me just move to, okay, what is the date? All right, let's move on to yesterday's data because today's data is there. Okay, here. So now I'll make this a bit more readable. Just go to buyer, click on the setting. Okay, color it as green and convert it to a line chart. Okay, similarly go to seller, go to settings, convert it to a red color and line graph. Okay, now what I like to do is I like to merge them. So click on the 3-dot menu, move to existing pane above. So it goes there, and then you can see closely there are 2 scales. So we need to normalize those. Just go to the 3-dot menu again, pin to scale. If it shows now B, then pin it to A. If it shows now A, pin it to B. Okay, so I'll just pin it to A. Now it is normalized. So I can just save it so that I don't have to create this again and again. And what this directly shows is, if I just show you guys, okay, I'll make this a little bit more clearer. Okay, maybe if I add precision, let me just make it a bit more readable for you guys. Maybe I'll make it slightly more readable. So I like to decrease the thickness a bit. Okay, thickness of the line is decreased. Okay, now wherever you see green lines, okay, whenever you see green lines, okay, green spikes, that is when the market overall goes up. Okay, whenever you see red lines or red spikes, you can see that the market falls down. Like for example, around here, when the market opened up here, you can see that there was a lot of selling pressure, so market came down. Whenever buyers are more aggressive, that is when market comes up. Okay, so what exactly is this data? So this data is not available anywhere. This is known as order book data. So it is just showcasing the actual initiated quantity inside futures. So it shows the actual initiated quantity inside futures, and that is how you can use this. Okay, so this is used for the intraday trading methods. So you can trade it with any technical indicator, you can trade it with simple price action as well, and this is bound to give you really good results overall. So that is how you use this. So for an intraday trader, this is like a dream come true, because it will directly show you where exactly market is under buying pressure and where exactly market is under selling pressure. So that is something that you can easily see. Okay, so if I just show you here, you can see buying pressure, market goes up, right? Whenever there is selling pressure, market falls down. So that is something that you can see here. You can see selling pressure, market falls down. Buying pressure, market goes up. So that is something that you can use. Okay. After this, let's say if you are using on an intraday basis, then this is fantastic. Okay, so you don't need anything else aside from that. But what about the positional side of things? So if you are going for some positional trades, I generally recommend using put call ratio or PCR. So just go to the search option and you can directly search for PCR. Just open search for PCR. So OI PCR historical, you can open OI PCR historical. Okay, so PCR is something that a lot of traders use, right? PCR is something that a lot of traders use. So just get rid of this modified OI PCR toggle. This is normal PCR. So PCR is always mean reverting, we know, and we know that PCR has a positive correlation with futures price. So here I can see wherever PCR is creating a top, that is when market will also create a peak. Okay, whenever PCR is creating a bottom, that is when market will also create a bottom. So I can just go and analyze those things. So here I can see that market created OI PCR created a peak. Okay, I don't have to zoom in. Okay, so OI PCR created a peak. After that, OI PCR comes down, market also comes down. So you wait for a slight retracement. Maybe you enter a trade on the next day if there is a slight retracement, or a bigger retracement also, it's fine. So I can see that here, let's say on the next day if I entered, market has fallen down. Okay, if a recent bottom is created under OI PCR, so around here I can see bottom is created. I'll wait for a slight retracement maybe on the next day. So next day was around here. This is where I will enter a bullish trade. After that, market did fall a little bit, but then eventually it rose up. Okay, this was the election wala thing. So during election, again, this is something that we don't consider because that was news based. Okay, but around here I can see that OI PCR created a peak. Okay, and after that, maybe around here you can go for a bearish trade, and market has fallen down, but slightly, not that big of a move. And now OI PCR has created a bottom, so there is a good chance that BankNifty could rise up from here. So that is the general idea that we use along with OI PCR. Okay, so this was the third step, right? So the second and third step was for intraday and positional both. Now let's say if you are going for some strategy, so we come to the fourth step. Okay, so first step was built up, second step was for intraday traders, that was the charts. Third step was for the positional traders, that was the OI PCR, and finally we have strategies. So just go to the trading section, go to options architect, you will find option based strategies. Okay, now how do you find such strategies, how do you trade such strategies? I will just simply explain to all of you. Okay, so just go to BankNifty. Okay, you can select any script that you want. If you are going for intraday trades, always go for weekly expiries, and you can select simple long calls or long puts for bullish and bearish respectively. But if you are going for positional trades, then I highly recommend that you go for a monthly expiry. So always trade on a monthly expiry and go with those debit spreads. Okay, so debit spreads, for people who do not know, it's a bull call spread or a bear put spread. So you can go for those. That is where you buy an at the money option and sell a slightly less expensive OTM option. So let's say if I'm doing it with calls, so I'll buy an at the money call option and I'll sell a higher strike OTM call option. So that is how it will create a bull call spread. Let's say if I am bullish on BankNifty, just for example, if I want to create a bull call spread, okay, this is the at the money call option that I have bought. This is the at the money call, out of the money call option that I have sold. Maybe I'll go slightly far off around here. Okay, let's say if I want to sell 53,500 call option. Okay, this will be my payoff of this particular bull call spread. So maybe this I will hold it till expiry. So this can also take place. This can also happen. Okay, so that is how you can use it on a positional time frame. If you're trading positionally, you can use this. All right. So that is it for me. Thank you so much, guys. Thank you so much for spending this time with me. All the best on your trading journey. If you need any help with regards to Quantsapp or trading in general, there is the helpline number on the top right corner. You can just help yourself. Our support agent will definitely be there to support you. Okay. Thank you, guys. Thank you for spending this time with me, and all the best on your trading journey. Thank you so much.